stocks should follow through on decent bars. And when they aren't, when they don't, and then they take out the bar, the decent bar, that's a warning sign. Like, for instance, this bar, boom, right there, you got the 200 there. That bar should follow through a high percentage of the time. But when it doesn't, and then it takes it out, that's serious. Like, what I found is that when something with high odds doesn't happen, it has the potential to be big in the opposite direction. You know, it's almost like when you violate the laws of nature, you get a serious, serious reaction. I like that. Remember, guys, I was saying this morning how you can stack the odds in your favor? Do you remember how to do that? Very simple. 1, trade position, meaning short below and go long above most of the time. 2, all right? What was the other thing? Let's do trade with 20 MA. Okay? Enter near something. It can be near the 200. It can be near the 20. It can be near price support or resistance. So let's look at this. Trade position, Intel is below the moving averages. So boom, got that one. Nice. Trade with the 20, 20 is down. All right, going short, nice. Enter near the 20. All right, so this is my play. Right here, boom. That bar. Here's my ad, GBI, and it's still going. I mean, you know, and it may not work in a big way, but that's how you put things in your favor. All right? That's how you put things in your favor. Now, sometimes when a stock may not be operating off the 20. It might be so powerful that it's operating more off the 8. So let me show you this. Like here you can tell that Apple is not acting off of the 20. There's just too much space there, right? So if you put the 8 on here, this is the moving average that it's working with. It tells you what it's working with. See that? So now you're going to take plays near the 8 instead. So, you know, when I say, that's why I don't say at or near the 20 specifically. I say at or near something. This would be at or near price resistance, right? This price resistance right there. Boom. This would be at or near, boom, the 200. This is at or near, color change, at or near the 8. Intel is at or near the 20, right? Oh. So, you know what I'm saying. Is Uber a safe play? Well, you tell me, all right? So you have to tell me where you have to determine where your stop is, how much you would lose, and then you determine from that, is that safe? Can you name it? Is the loss, I can get that back. And if you can do those two things, go for it. It's okay. All right. You can't be uncertain about these things, guys. Not at this stage in the game. So this is just close now. But remember, guys, your gap is skewing the moving averages because the moving average at the open is still incorporating data from yesterday or the day before, the prior trading day. So the gap skews it. These moving averages are off a bit, right? And the moving averages don't really start being 100% true until later in the morning, right? When they're no longer incorporating from yesterday, especially on big gap days. The moving averages don't have a point like that and just go straight down. That's the gap distorting things, right? Yeah. But this is just together, narrow state, right? When do you know that a stock is not acting off the 20? When it pops and drops, and that drop after popping is nowhere near the 20. You see, we pop and drop, and that pop is nowhere near the 20. You can look at eBay. We pop and drop, and is nowhere near the 20. So you know this is more of an 8 or 13 than it is a 20. Just something like this here, guys. So look, here you're at the 20. You've got a red bar that's eliminating green right at the 20. Is that risk acceptable? If so, give it a shot. You're playing with the 20. You're playing in the right position. You're playing at or near something. If you can keep those basics, right? Keep those basics, man. You're not going to get too far in trouble. You guys just drift away from the basics and you get lost in the noise again.